What is happening, guys? In the last video, we spoke about price hitting all-time highs silently during President Trump's inauguration, and no less than a day later, we have Trump doing a presidential address and mentioning this. I'll play a short clip for you.
Reduce the cost of virtually all goods and services. It'll make the United States a manufacturing superpower and the world capital of artificial intelligence and crypto.
That's right, the world capital of artificial intelligence and crypto. Actually, later that day, Trump appointed Senator Loomis, officially named chair of Senate Banking Committee on Digital Assets. Wow, this is super, super bullish for price and for Bitcoin. Creating this subcommittee for digital assets, to me, basically confirms a strategic Bitcoin reserve. Also, Loomis went on to say herself, Congress needs to urgently pass legislation establishing comprehensive legal framework for digital assets, and that strengthens the US dollar with a strategic Bitcoin reserve. She also went on to say, I'm humbled. My colleagues have placed their trust in me to chair this historic subcommittee, and I look forward to shepherding bipartisan legislation to President Trump's desk later this year that secures our financial future. So super bullish news for BTC. And here we have, since we are now going to be the nation for artificial intelligence crypto, I've artificially generated President Trump here as a Disney Pixar themed image. It's truly insane what you can do with AI. Honestly, it's kind of scary because I also artificially generated myself. That's right. This is me with a turtleneck. Now, I've never wore a turtleneck in my entire life, minus that one time when I was 4 years old and I was forced into it for Christmas photos, but good God, like, get me out of that thing. Honestly, if you want to artificially generate yourself, there's plenty of apps available to you. And you can actually create realistic images. You can actually create yourself doing a podcast so you don't have to sit here and look ugly. You can perfect yourself. It'll look just like you. It's absolutely horrifying. So if you want to scare yourself straight, artificially generate an image of yourself. But if you want to trade crypto, you've come to the right place. Welcome, everyone. It's Crypto Neil. Let's jump on into the charts now. So here we have BTC on the daily time frame. And once again, during the inauguration, we hit all-time highs very silently, but we didn't close above the former all-time high. And here we have price action just ultimately being quite volatile. Around these announcements and Trump's speech, we had price just essentially annihilating long and short positions. On the lower term time frames, we had extreme volatility. Like, these moves here are 8% move, 5% move, like major price swings between 106 to 102 to 101. Like, these are $5,000 to $8,000 price swings. We're now starting to tighten up and consolidate a little bit more. But what am I getting at here? Ultimately, don't trade the news. That's the takeaway here. A lot of people think that when Trump says something regarding Bitcoin, that price is just immediately going to spike to new all-time highs. And yes, we might breach all-time highs, but ultimately, if you're not closing on higher time frames like a daily or a weekly, if you're not closing above the old high, you're not actually making any substantial ground. You're just consolidating. So if you want to trade on a more long-term basis, look at something like the weekly. Look at the candle closure. Are you closing above the former all-time high? If yes, then that's bullish for continuance, for price to continue upward. Same with the daily. You want closures above the former high, then ultimately you can keep holding your longs. If you're positioned lower, still hold, obviously, but if you're looking to enter the market at all-time highs, you have to be very cautious, because it's very easy for the market to receive quite a nasty pullback. And if you're just starting in crypto, if you're just entering this space and the first thing you experience is like a 22% drawback, then you're probably going to be scared away from investing forever. So That's why I'm here, try to keep you safe on whatever time frame you see fit to invest in. So we're gonna just jump into lower time frames here and kind of see what we see in the market. Just putting on my I feel like Ash Ketchum when I put on the ball cap. It's like you're right dead serious to catch Pikachu. Anyway, if you don't know what I'm talking about, you probably had a horrible childhood. So jumping on down to smaller time frames here for Bitcoin, we can see that volatility is finally starting to come down back to these lower levels, and we want to see volatility hang around these lower levels and start to contract and get expansion. And that is when you look for direction of price. That is when you look for positions to take, because you're going to get a lot stronger move off of a volatile bounce off of that expansion. So going to something like the hourly time frame is where you can start to get this idea basis and maybe front run these positions. So we are getting RSI kind of flatlining around a neutral zone. We are getting volatility basing out here for a long time. So you could see price expand off here, and that is ultimately when you look to go long or short. But because you're just consolidating in a greater range, front running these positions on lower time frames might still be quite risky for you, especially on the weekend. Weekend, typically wherever you close on a Friday is where you're going to open on the Monday. So if we go to the daily once again, and we're just going to mark off Friday's closure here is around 104,800. So now that we have that drawn into the chart, we can see that any sort of interaction, I'll go down to the hour, any sort of interaction with this line, to me, is where price is going to be attracted to. It's going to act as a magnet. So if volatility, say, were to get that cyan expansion upwards and price were to sharply move down, I would be extremely cautious on entering that trade, because you could just retest support, come right back up, and then by Sunday night, Monday, close exactly where you left off here, where you closed on Friday. So just be very cautious of that, taking positions on the weekend. I don't recommend trading the news. I don't recommend trading on the weekend. So what do you recommend? How do you trade? You look for moves on greater time frames that have clear signals for entry and that are impulsive by nature. So right now we don't have the volume because we've gone into the weekend. We do have the compression on the BBWP, and we are flatlining on RSI. So very, very shortly we will get some sort of signal on expansion of these two indicators on whether or not direction is going to go up or down. We are consolidating on this rising trend line around all-time highs, which I do think is good for price going forward. Checking in on a few of the things I mentioned in the last video. So CRV, we mentioned that we were bouncing off of these lows on CRV. We now have what's called a triple bottom in play, which I really, really like this type of support. That means price is not breaking down from these levels. This is a strong support, and this is validated on larger time frames. So you go to the daily, we clearly have support in this region where price is wicking off of it. Buyers are stepping in to push price back up. We also talked about on lower time frames, if you trade something like this, this is where you receive the most gain. Whereas something like Bitcoin or Ethereum, which is a high market cap asset, those things are only going to move, 5 to 10% on these impulsive moves. But something like CRV with a little bit lower market cap, but still enough liquidity to find the trading pattern. I don't even know how to say this. If you trade crap coins like meme coins, there's no liquidity to them. There's not enough money circulating to market to sustain them. So that's why you get these extremely volatile moves up and down. So picking an asset that still has a high enough liquidity that you can trade it with leverage and not get wrecked immediately is, to me, important, and it keeps your trade portfolio safe. So if something like CRV with a higher market cap but still room to move up is something that you want to look for. So we're in this nice little range. We've wicked off the bottom. From here back to testing these old highs is a 25% move still. So now that you've back tested this old support, this acts as a nice entry to a long position. Even if you enter at current price here, you put your stops below the range lows here. I'd even say as far as below this wick here is a really reasonable stop loss. Then targeting the old highs somewhere within these wicks here is completely reasonable. That's a 2.2 risk reward trade and potential upside of 26%. So you could even use like 2x leverage on this position, which would net you over 50% profit on this trade, around a 25% loss. Now, that sounds like extremely high numbers, of course, but you have to manage your risk. And this is a video I want to do later about position management. If you're actively trading the market, you're not trading with all the money you have in the bank. You're just trading with a small portion of it, let's say maybe 2%. And it's easy to use something like 2-3x leverage when you're only trading with 2% of your capital, because you're willing to risk that whole position size, and ultimately it's not going to affect the bottom line. So with this, with the nice risk reward here, so let's say you use 2x leverage, 50% gain. There's a trade idea there. And none of this, I can say, none of this is financial advice. This is just how I look at best risk reward to trading these assets in the market. How can I get the most gain when we have an upside move, and how can I save my account from the most loss when we have a downside move? Also checking in with Ethereum. Ethereum I'm really liking just because I'm seeing a lot of negative sentiment in the market on social media. Everyone's saying Ethereum's dead, it's not moving against Bitcoin. To me, this is really, really bullish, because often the market just does the exact opposite of what the what the masses say. So Ethereum is something, if Bitcoin starts moving up above all-time highs, I want to be positioned in Ethereum, because I do think we are going to start breaking out of this range, and then target would be the all-time highs. So 44% move to all-time highs. We go beyond there. We move kind of similar to Bitcoin and make new highs. It's quite the gain for Ethereum. But that's more of an investment long-term standpoint compared to the CRV, which is very, very short-term standpoint that I have on those assets. So anyway, I think that is just about going to do it for this video. Kind of just ranted for a while there, but ultimately on BTC, expect more consolidation and possibly a breakout Monday, and that is when you want to start to see these closures above the old all-time high. And if you start closing below this range, that is when I'd say downside is confirmed, and you would be retesting the 92K as a minimum target there. So that's all I have for today. I do want to say thanks to anyone who is following the channel. If there's anything you guys want to see, if there's anything that you want me to talk about in the next video, please drop a comment. And I'd like to do kind of more teachables on how I look at the market, how I analyze things, and how I take a trade. Perhaps do some practice scenarios, talk about more about risk reward, and the tools I use, the indicators I use, and why I see validity to these in the market. So drop a comment, like, subscribe. Thanks for coming out. Crypto Neil signing off. Peace.